The company that our group had to analyze is Ferrovial, and its stock exchange is IBEX 35. Its sector is transportation, infrastructure, construction, engineering, and services. It is a limited liability company, and it was available in June 28, 1952. It is located in the Calle de Príncipe de Vergara, 135, Madrid, and it is classified as an infrastructure management and services company. It is also involved in various areas such as construction, engineering, maintenance, and operation of infrastructure assets, including transportation structure such as roads, airports, and railways, urban services such as water and waste management, and energy infrastructure.
Okay, apart from the mandatory financial statements, the Ferrovial S.A. also submitted the statement of changes in equity, the statement of cash flows, and the auditor's report. The functional currency in which financial information is submitted is the euros, and the figures in which it is submitted are the millions. The annual accounts were formulated by Ferrovial S.A. The tax regime applied in the corporate income tax is the group. Yes, the restructuring is applying the tax neutrality regime, and the accounting firm that has reviewed the financial statements is the Ernst & Young SL, also known as EY. The qualification of the opinion of the auditor when reviewing the accounts is approved, and the auditor didn't make any recommendation to the company. If this did happen, it would be bad for the company.
Well, I'm gonna do a summary of the annual report of Ferrovial, talking about leases, provisions, financial instruments, and equity. From leases, the company classifies leases from operational leases and financial leases. Financial leases are those that recognize when the lessee assumes most part of the risk and rewards. Expenses related to the operational leases are recognized in the income statement as they are incurred. Ferrovial has a significant operational leases for its aircraft buildings. Financial instruments, the annual report provides information on financial assets and liabilities. Financial liabilities are classified as either amortized cost or fair value through profit or loss, depending on their nature, and financial assets at fair value through other compensative income meet specific conditions. Provisions, the report includes provisions for risks and expenses, totally €177. This includes provisions for tax audit and litigations matters. The movement in provisions during the year includes an increase in €9 million due to assuming legislation related to CEPSA. There is also an adjustment of €4 million for the interest rate applied to these provisions. Equity. Ferrovial dividends policies is based on the scrip dividend systems, where shareholders can choose between receiving new shares or selling the subscription rights. The company also repurchased its own shares for cancellations. In 2021, the repurchase of shares and dividends payments amounted to minus €863 million. The market value of the company's own shares at the end of 2021 was €140 million. So these are the key points that summarize the annual report of Ferrovial.
The report also mentions that Ferrovial registered deferred tax assets of €6 million as of December 31, 2021. At the beginning of the year, December 31st, 2020, the company had €135 million in deferred tax assets and €29 million in deferred tax liabilities, resulting in a net balance of €106 million. Throughout the year, various adjustments were made, impacting the assets, liabilities, and net balance of deferred taxes. After considering all these adjustments, the company ended the year with €6 million in deferred tax assets and €4 million in deferred tax liabilities, resulting in a net balance of €2 million. The explanation provided highlights that these deferred tax balances primarily stem from temporary differences, specifically provisions that are not taxable for tax purposes.